What is going on, guys? I know you guys have been waiting for me to post new videos. You guys have been waiting for the Builder's Guide to Accounting and also the AIA documents. Today, we're going to get into the Builder's Guide to Accounting. I wanted to tell you guys my course is now available. I'll be showing it right now on the screen. In my course, I will be going over everything you need to know for the test. 5 people have already took the course and they passed the exam on their first try. I highly recommend, if you need a course, to get my course down below. It's the best of the best. It comes with practice quizzes as well. There's over 1,000 questions in the practice quizzes, so you guys are always having new questions, and these questions are as close as it comes to the test as you can get. So they're the best out there, best course out there. Everyone that's in the course loves it so far, and it's a community. Everyone's talking to each other. Everyone's sharing information they have. Everyone's sharing their experience with the test and so much more. So yeah, just want to let you guys know, make sure to hit down below the course. The WhatsApp number is also there. The WhatsApp group is still free if you want to join the WhatsApp group. I'll put the number here as well, so make sure to join the study group as well, and we're going to get right into the Builder's Guide to Accounting. Well, this is going to be chapter 1. Chapter 1 is a pretty important chapter as well. It's going over everything that you're going to learn in the book. Most of the stuff that's in chapter 1 actually goes more in depth in later chapters in the book. Whenever I had a question on the test, I usually, if I didn't know what something meant, I would go to chapter 1. If it said something about accounts receivable, I would go to chapter 1 and just find accounts receivable and find what the information is. Yeah, let's get into chapter 1. Before I get into it, there's a link down below. I am giving free 30-question quiz on the BGA book. So if you need practice questions, click the link down below and I will email you 30 free practice questions for the Builder's Guide to Accounting that you will most likely see on the exam. Yeah, that's a little freebie for you guys. I didn't have anything on page 1. Is going to be reducing your costs will achieve maximum efficiency is the goal of well-designed bookkeeping system. So the records you need. But if you can make good use of the financial information in your books, you'll be a more informed manager. The more insight you develop, the more effectively you become. The sales journal. The sales journal is a detailed record of all your income from operations. You need this detail for financial statements. It also provides a good way for you to see how you're doing compared to last year, last month, or last week. The comparison of income to past performance is very important to you in planning. Good sales records are also helpful in finding the right market for your services because there are so many different kinds of contracting markets. You must know which ones will let you compete most profitably. Okay. Naturally, you need to know who owes you money. Your method of keeping track of receivables is important to the accuracy of your billings, your collections, bad debts, and financial statements. Many builders run into their single largest bookkeeping problem when it comes to keeping track of receivables. So they might ask you on the test, what is a builder's single largest bookkeeping problem? And it's keeping track of receivables right there. The check register is a listing of all checks with expenses broken down into categories. It's important to write up this record each month or even better each week. Bank accounts. Also, if you guys have noticed, I am here wearing a wedding band now. I did get married. It's kind of the reason I took a break for so long. So yeah, now I am married. Don't depend on your bank to keep your checkbook straightened out. Balance your bank account every month to be sure how much cash you really have. Once again, balance your bank account every month to be sure how much cash you really have. Cash on hand. Most builders need a cash fund for the little expenses that come up from day to day. COD deliveries, postage due, coffee and donuts, a newspaper, expenses too small to write out a check for. Setting up a controlled petty cash fund is the best way to control these disbursements. In a petty cash system, you vouch for all expenses by replacing cash removed with a slip of paper, a voucher. That explains the reason for the expenses or list an account number and gives the amount. Your records should let you calculate the hourly cost of owning and operating your equipment. That's equipment records right here. Okay, overhead expenses. The fixed necessary expenses of being in business are often considered to be uncontrollable. Your record of past overhead expense is the best indication of what you can expect in the future. If they ask you your overhead expense, how do you indicate your overhead expense? Your record of past overhead expenses is the best indication of what you can expect in the future. So it's your past record of your overhead expenses. A good budget for overhead expenses will serve as an important guideline for month-to-month planning. Accruals. Accruals is very important. You need to know what accruals is. In the course, I go more in depth in what accruals are and explain what it means better. So if you need help on this, once again, join the course. Bills you've sent out are income, even before the cash comes in. And the bills you owe are direct cost or operating expenses, even before you mail the checks. These are called accruals. The chart of accounts is a numbered list of the accounts on your general ledger and operating statement. Ratio. These ratios show month-to-month trend of your business. These trends are useful in revealing financial statements themselves. For instance, a statement that compares this year's performance to last year is valuable for finding out whether your management skills are producing profits and whether your financial health is improving or declining. Okay, double entry bookkeeping. Very, 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 very important. The most common modern bookkeeping method is called double entry bookkeeping. This is, I think, a question everyone gets on the test. They'll ask you, what is the most common modern bookkeeping method? And it's double entry bookkeeping. This is something I go over in the course showing you, hey, this is most likely going to be on the test. I try to go in the course giving you all the information as fast as possible so you don't have to watch thousands of videos. It's just like, here you go. Here's all the information. This is all you need to go pass the test. Double entry bookkeeping is so called because every transaction requires two entries. Once again, double entry bookkeeping is so called because every transaction requires two entries. A debit is an entry made to the left side of an account, and a credit is an entry made to the right side account. This is very important, understanding what debit and credits are. Debit balance pluses and credit balances minuses. Very important. I go over this as well in the course so you can understand this. That is very important as well. It's kind of a cheat sheet. All right, the debit increases in expense count and decreases the balance of cash. All entries to the general ledger, the record that summarizes all business operations. Figure 1.1 shows the traditional ledger page. Debits are posted on the left side and credits on the right side. Figure 1.2 shows the results of posting to a single general ledger account from several sources. The T account, so named because of the letter T, created by lines, is used here to demonstrate this. The T account is a simple way of separating debits and credits on a worksheet. The financial statements are reports which express information summarized from the general ledger. The balance sheet is one of three financial statements. It's a listing of properties, assets, debits, and liabilities, and ownership value, net worth. The term balance refers to, and right here, very, very important ratio. I go over this in the course as well. You got to know this ratio. And also there's different ways this ratio is written that they don't show in the book that you need to know as well. The income statement. List of income, directs, costs, operating expenses, and profits. While the balance sheet lists the balance in assets, liabilities, and net worth accounts as of a specific date, the income statement reports the results of operations within a defined period. All right, the statements of cash flows. Last year's income paired to this year's will reveal the good and bad trends in the business and the increase of decrease in volume, expenses, and profits. All right, that's chapter 1, guys. If you guys have any questions, please feel free to email me. My email is down below. And then also you can message me on WhatsApp as well. My WhatsApp's down below. And if you guys are interested in joining the course, the link is down below as well. And I do run a special. If you already purchased a course and you're not liking it from another company or something like that, if you message me and say, hey, I already bought this course, I will help you out, get you a discount because I know it's expensive to join another course. This is the best course. You can ask, so many people have joined other courses. They haven't passed the test. When they join my course, they pass the test. So yeah, I'll see you guys in the next video.